YouTube, welcome back to the Investing on a 9 to 5 YouTube channel. It is your boy, the Dividend Dog. Happy Saturday, guys. As the video titled, guys, I am buying more of the retail giant Walmart, and we'll be going over some key indicators as the reasons why I'm doing that. But before we do that, guys, I want to give you guys all a quick shout out there for liking on the last video and subscribing to the channel. I think we gained some subscribers on the last channel. So continue to like and subscribe and share this out, guys, helping the page grow and we're liking it, and it means you guys are liking the content, so that's awesome. So we're going to take a deep dive, guys, like I said, into the retail giant Walmart, aka titled as everyday low prices is their big slogan. But the reasons why I'm liking Walmart, and I've been starting to accumulate some shares, just low point shares right before their earnings here, because I didn't know how they were going to do after their recent stock split. But as we are in high inflation markets and everything's expensive, I like to follow the consumer. I always like to go and find where the consumer is shopping and where they're spending their money during this high inflation times, because it's hard, right? So people are doing what they have to do to make ends meet, which is fine. And I think times will improve here as we go along throughout the year. But Walmart is a key indicator to how the consumer is doing. But what they've done this quarter here, guys, they've gained not just the middle income, the low income consumers, which everyone thinks Walmart is aimed for, but now they've added on high income shoppers that are up in $100,000, $120,000 household budgets. So once again, guys, Walmart ticker WMT closed out at $64.65 on Friday. It's priced out at 27 earnings right now, which is a little premium, but you got to know what you own and why you own it. And once again, this is not financial advice. This is just me talking smack through my mic. But anywho, back to it. 25 forward PE means that's trading a little bit cheaper in the future. Got an actual upgrade on this last week. Got analysts saying it could go to $72, $73 based off of their last earnings report. So just to give you guys a quick rundown of Walmart's last earnings, look, revenue went 161.5 billion versus the 159.5 billion, which analysts were expecting them to hit, but they actually got 161. Their net income jumped up to 5.1 billion, or you can essentially say 63 cents per share in the 3-month period that ended in on April 30th. That's when the quarter ended, and so on. And then revenue, like I said, guys, it jumped up 6% from the year ago quarter. Now, you guys may be, thinking, oh, well, Walmart's not a growing company. It's not like a Nvidia or a tech company or anything like that runs pretty fast. But guys, this is a steady value company. I mean, if you go to a Walmart right now, you're normally going to see steady flow. It's going to be packed. They are, I think 60% of their sales came from their groceries, and you got their e-commerce is growing, and their Walmart Plus, where customers can get their groceries brought out to them. Those things are consistently packed. Now you're looking at the sales, earnings per share, EBITDA. These are all consistently growing. Their operating margin is going to continue to grow with their new Better Goods product line that they're dropping, which I think is going to help benefit and attract more customers. Let's just take a quick look. Profitable to last year, profitable last 5 years. So you got great cash flow from operations. So Walmart, the management team, they know what they're doing there. And also, guys, too, a quick hint. Walmart is actually bigger than Amazon. Amazon just owns them from the e-commerce standpoint. You see Amazon more because we're on our phones more. Actually, Walmart's bigger than Amazon. Just to give you a quick fact here. They've also been buying back shares, which is good too. Stock's been low. They had the stock split. They still are continuously to buy back shares, which shares are outstanding continue to go down, which is good. Means they see value in their companies as well. Revenue estimates consistency growing. As you guys can see, earnings per share is accelerating. The next year's growth will be better than in the last previous years, which would be, hinting at a time to maybe look at adding this value stock to your portfolio. The dividend, guys, Walmart's paying a growing dividend. Now, is it growing, out of the water? No, it is not. But the stock price could offer you some growth right now. And where therefore, when they start increasing the dividend as things continue to improve, therefore you've got stock growth and dividend growth at the same time. And we're holding this for the next 10, 20 years, not just holding it for the next 5 to 6 months. This is long-term thinking. I think Walmart's a value stock here. So here is an analyst rating for it. We got a tie of $78, 21% from where it's at now. So we got $67 as a median. So you guys can see, not really, nothing really too crazy of gains, unless we go up to $78, $80, one day. Yeah, now we're starting to talk. But these are, consistent. Walmart's a good value stock to add to your portfolio to be able to, weather the storm when things goes bad in the market. Once again, this is not financial advice. As you guys can see down here at the bottom, I've got 8 shares, only 6% of my Roth, and we're only up about 7% of it right now, $36. Woo! But I'm going to continue to add to this. When the time does come, and right now I'm building up some buying power, so when I do start buying, Walmart and once again Amazon will be top of mind when I start back buying again in the portfolio. But once again, it's not fun, guys. It is your boy, the Dividend Dog, on the Investing on a 9 to 5 YouTube channel. Let me know what you guys think in the comments. Let's get at least a couple comments down there on what you guys thought on Walmart, and if you guys see if it would be a good value to add to your portfolio. As always, guys, happy Saturday, and I'm out.